Here's a summary of Datadog's Q2 2025 earnings call, focusing on key financial metrics, management commentary, and future outlook, overall performance and financial highlights. Datadog delivered a strong second quarter for fiscal year 2025, exceeding expectations with revenue of $827 million, representing a healthy 28% year-over-year growth. This performance was driven by robust usage growth from existing customers, particularly within their AI-native cohort, and a steady pace across the rest of their business. The company also generated free cash flow of $165 million, translating to a 20% free cash flow margin. Key financial metrics: revenue, $827 million, up 28% year-over-year. Gross margin, 80.9%, a slight decrease from 82.1% last year, but with a positive outlook for improvement in H2. Management attributes this to ongoing engineering cost savings efforts. Operating income, $164 million, 20% operating margin. Excluding the impact of the Dash conference and FX, the operating margin would have been 22%. Billings, $852 million, up 20% year-over-year. Remaining performance obligations, RPO $2.43 billion, up 35% year-over-year. Customer metrics: total customers, approximately 31,400, up from 28,700 a year ago. Customers with ARR greater than or equal to $100,000, approximately 3,850, up from 3,390 a year ago, representing 89% of ARR. Platform adoption, continued strength in cross-product adoption, with 52% of customers using 4 or more products, up from 49% last year, and 14% using 8 or more products, up from 11% last year. Management's forecasts: guidance Q3 fiscal 2025, revenue, $847 million to $851 million, 23% year-over-year growth. Non-GAAP operating income, $176 million to $180 million, implying a 21% operating margin. Non-GAAP net income per share, 44 cents to 46 cents. Fiscal year 2025, revenue, $3.312 billion to $3.322 billion, 23% to 24% year-over-year growth. Non-GAAP operating income, $684 million to $694 million, implying a 21% operating margin. Non-GAAP net income per share, $1.80 to $1.83. Significant risk factors: AI-native cohort volatility. While the AI-native customer group is a strong growth driver, management acknowledges potential volatility in usage and contract negotiations within this segment due to the evolving nature of AI workloads and customer optimization strategies. They approach guidance for this cohort conservatively. Economic environment: although not explicitly detailed as a primary risk in the transcript, general economic conditions and their impact on IT spending can always be a factor for SaaS companies. Competition: Datadog operates in a competitive landscape, and while they believe their integrated platform strategy differentiates them, ongoing innovation from competitors is a constant. Highlights: strong revenue growth, exceeding guidance and demonstrating robust year-over-year expansion. AI-native cohort momentum: significant usage growth from companies building AI-native applications, with Datadog becoming a strategic platform for many leading AI companies. Platform adoption: continued success in driving customers to adopt multiple Datadog products, indicating deep integration and stickiness. Product innovation: the launch of over 125 new products and features at the Dash user conference, with a strong focus on AI agents, Bits AI, developer productivity, enhanced observability, and security. Security business milestone. Security products now generate over $100 million in ARR, growing in the mid-40% year-over-year. Talent acquisition. Successful execution of hiring plans, particularly in sales and R&D, to support growth opportunities. Gross margin improvement outlook. Confidence in further gross margin improvements in the second half of the year due to cloud efficiency initiatives. S&P 500 inclusion, acknowledged as a significant milestone. Lowlights. Gross margin dip. A slight decrease in gross margin compared to the prior year, although management is optimistic about reversing this trend. FX impact. Experience negative foreign exchange impact on operating income. Most important statements from management. Olivier Pommel, co-founder and CEO. Business drivers. Overall, we saw trends for usage growth from existing customers in Q2 that were higher than our expectations. We experienced strong growth in our AI-native cohort. AI opportunity. AI is a tailwind for Datadog as increased cloud consumption drives more usage of our platform. We are incredibly excited about our opportunities. First, AI is a tailwind for Datadog. Second, next-gen AI introduces new complexity and new observability challenges. Product vision. We continue to relentlessly innovate to solve more problems for our customers. We believe that this validates our approach to deliver a unified platform, which breaks down silos across teams. Long-term outlook. In other words, we're just getting started. David Obstler, CFO. Q2 financials. Q2 revenue was $827 million, up 28% year-over-year and up 9% quarter-over-quarter. AI-native revenue contribution. The AI-native customers contributed about 10 points of year-over-year revenue growth in Q2 versus about 6 points last quarter. We remain mindful that we may see volatility in our revenue growth on the backdrop of long-term volume growth from this cohort. Gross margin commentary. Our Q2 OpEx grew 30% year-over-year. We are continuing our focus on cloud efficiency and believe that we have further opportunity for gross margin improvement in the second half of the year. Guidance philosophy. Our guidance philosophy overall remains unchanged. As a reminder, we base our guidance on recent trends observed and apply conservatism on these growth trends. Sales capacity. We have been successful in increasing both our number of salespeople and our ramped sales capacity. We started that, as you said, in the last part of 2025, and we are seeing evidence of that through our new logo production and our pipeline. In summary, Datadog had a very strong Q2 2025, showcasing robust revenue growth, expanding platform adoption, and significant product innovation, especially in AI. While acknowledging potential near-term volatility from their high-growth AI-native customer segment, the company provided confident guidance for the rest of the fiscal year and expressed excitement about the long-term secular growth opportunities driven by digital transformation and AI.